So I have a last point to make here, right? We were considering the situation when the blue line was above the red one, and when we bought. Here at this point we sell when the red line is above the blue one. We sell, but the question is, when should we exit the market? We also use MACD. And how do we use it? Let's see. How do we use MACD? Here, I insert the object, a trend line. I connect the market activity to heels of market activity in the negative. Yeah, when I buy, I'm looking for the heels above the zero line. This is the zero line, yeah? So when I'm buying, I look at the MACD in the positive area. When I sell, I'm looking at the MACD in the negative area. That's the difference. So when I'm trying to find that, I see this market activity and the price of gold. What do you see here? At this price, many people would like to sell, and the number of people willing to sell at this point is more than the number of people that are willing to sell here at this price. So if you sell here at this point, somewhere here at this point, you got to exit the market. And the task now is, I don't know whether you like this platform. This MetaTrader demo account is used for actual transactions, for making deals. Today is Saturday and we cannot do this. We cannot conclude a deal because the market is closed and it shows this sound. Right? The market is closed. Okay. But actually, I would also like to tell you a few words about different orders in the market which you can make. You can make an instant transaction here by just clicking sell or buy. What about this stop loss and take profit? What are these things? What do you think? What are these things? Stop loss and take profit. Stop loss, for example, you open the deal to buy or sell, but for some reason you got to go, I don't know, to a bathroom, to water closet, or somewhere. You cannot see the screen right now. So, but the market during this particular period of time, the market may change. So in order not to lose anything, you put a price below which or under which you cannot go, which is not making you profit. If you do this, right, for example, now they are equal. Here at this point they're equal. But for example, if you change it at this point, or you take profit a bit higher, this is going to be your profit. Understand? This is done when you cannot attend personally in front of the computer. Also, for example, you are sure that something is going to happen in the near future, and you can trade not in instant execution, but in a pending order. Pending order is something that can be done in the future. It's a sort of a a derivative market, when you buy at a certain price in the future. For example, you would like to buy one lot of gold. One lot of gold at the price 17 or I don't know, 1869. You put a stop loss at 1800, for instance, and take profit at the price of 1900. So as soon as, and you place this order, now I cannot do this because the market is closed. Understand? But when the price, the real price, reaches this level, your transaction opens automatically without your being attended in front of the computer. You do not have to sit in front of the computer this way. You just place a pending order. It will make it automatically. And if the price goes down to 1800, it will close the deal automatically so that you don't lose anything more. And if it reaches 1909, it will automatically close and take profit for you. Also automatically. So, again, you do not have to be in a position in front of the computer or anything else. Now comes the most important task. We start doing these operations, all right? I think over the past classes, over the past 3 classes already, you understood a little bit about what the financial market is and how we do this, how we analyze this market. I would like you to, if you find it more convenient to use investing.com, then use investing.com because it is also a very great instrument to analyze. The point now is, each one of you is going to take an asset, I don't know, Tesla share, a currency. If you would like to take a currency, take currency. If you like gold, take gold. If you like Tesla, take Tesla. If you like Bitcoin, take Bitcoin. Anything. Let's discuss that. Who takes what? For example, you. What do you take? What kind of asset do you take? Gold. Okay. Gold is yours. Next. Bitcoin. Okay. Next. You may take currency, Swiss franc, for instance. It does not matter. Swiss franc. Okay. Gold is already taken. Yeah. Gold, we have it. Oil, for instance. Brent oil. You're welcome. Brent oil is taken. You may take WTI oil. WTI, West Texas Intermediate. It's also oil. Currency? Euro and dollar. Okay.
Maybe gas and dollar.
Gas. Pepsi. A share, that is. Next. Oil is taken already. Nestle. Nestle, why not? Good company. Next, please. So I would like to help you a little bit and start doing my own analysis, and you will be able to follow what I'm doing and do your personal analysis as well. Okay? So I will choose a neutral asset so it does not again appear in any of you. For example, I would like to take soya beans. This is a commodity which can be found on the futures market. Commodity. Soya. No symbols. US soybeans futures. This is the one. First of all, I would like to save my chart. What I should name it, first of all. I save it this way. Soybean analysis. And also my soybean analysis, November 12th, 2022. Save. All right. My soybean analysis. What do I start with? First of all, I start with a longer term view. In order to see what is happening to this asset in the long term view, I got to choose a daily chart. 1D chart. A daily chart. Why do I need this? I need to find the last impulse point in order to understand the dynamics of this market. Let's see when was that. Impulse 1, impulse 2, impulse 3. So I think the last impulse, so it's always going up and up and up. The price of soybeans over the past 2 years goes upper and upper and upper. I think this is at this point, which is the last impulse point. And maybe this one, because this is not the end of it, perhaps. And some kind of a continuation can be expected. So I would like to take this particular point. Fibonacci retracement starts here. This is Fibonacci retracement. I've taken it here. You can find it on the left hand side here, and you choose from the list of these things Fibonacci retracement. And I've chosen this, Fibonacci retracement. and constructed using it from the last actually impulse point. I can also write this here by using this arrow and use a text. I say that it's last impulse point. Last impulse point. This one. I need these lines in order to understand the levels of support and the level of resistance. What is the level of support and what is the level of resistance? The level of support is the floor below which the price of soybeans is not going to go. I construct Fibonacci perhaps it's not good spelling, yeah, Fibonacci lines starting from the previous impulse point on a longer term chart. Usually it's a daily chart. I construct Fibonacci lines on a longer term chart. Usually it's a daily chart. Soybean price at that impulse point was, how much was it? I can use horizontal line in order to measure this price. It's 1175.84. 1175.84 USD. Soybean price at that impulse point was, I start looking for the line of resistance and the line of support. The line of support is the price of soybean below which it is probably not going to go. The line of resistance is the price of soybean hitting the bottom, hitting the ceiling. What is the ceiling? Yeah, it's something above your head. Let's try to find these two lines. Well, usually it is determined visually. It's the maximum number of times the price of soybean reached that bottom price and bounced back again, back up again, bounced back up again. What kind of price is it? I think it is this one. The line of support. Let it be red. Line of support.
I'm sorry, maybe it's a student question, but why would you say that it's a line of support?
Usually it is determined visually. It's just you got to find the maximum number of times the price of your asset reaches this lowest point, the maximum number of times, and bounces up again. So it makes a sort of a history for you that this is going to repeat in the future as well. Because the idea of this analysis is that future repeats, what happens in the past repeats in the future. History repeats itself once again. This is the whole idea on which this analysis is based. And you got to look at your asset and see realistically, visually, just see what kind of price is it. It goes down right on this price and bounces up again. And I feel like this is this one. The line of support. It can also be a Fibonacci line, this one. But why I do not take it? What is the reason for me not to take a Fibonacci line at $300? Why not choose this line of support? What do you think? What can be an explanation? Fibonacci says that the line of support should be here, somewhere at 1300. Because you see it bounces, it hits this price and bounces up again several times. I do not take it because for me dropping down here is less probable than for the price going down at this level and bouncing up again. It can happen, but it will take longer to do that. So I take this line of support. And I also got to choose a line of resistance. What kind of line of resistance I would like to take? Again, visually, I can take this Fibonacci line at 1479. And yeah, actually I can leave it at this particular point. Because this level, at this level, the price of it may go up again and hit this price and bounce down again. Not up, but down. Actually, once again, we may consider only the Fibonacci lines. So you may not take my advice at this particular point and decide the other way around. We can take a Fibonacci lines only. We can consider this corridor, for instance, and it will be quite enough for you for the longer term view, like until early December. If I take these two lines, it's also okay in terms of the line of resistance and the line of support. Let's do this. Line of support and line of resistance. And they are the lines, the Fibonacci lines. They correspond to the Fibonacci lines of 1407 and 1479. The line of support 1407, 81. The line of resistance 1400, not 17. Yeah, 1400, 79.47. So this is the corridor of volatility. The space between the two lines, is the corridor of volatility. It shows realistic fluctuations of the price in November, December 2022. A longer term view would not be sensible here at this particular point. I do not require more.
What if my input point is lower than the ceiling?
What's the point in finding these points? Yeah, this is the question.
My input point is lower than the ceiling. The last ceiling price.
Perhaps like this, you mean to say? Yeah, like this?
Our input point is
You started from above or from below?
we can start from.
Yeah, if your price is going down, then your impulse point is going to be above, and you start from above and draw it down, like here, yeah, like this one. I'm doing this from below to above because the trend of soybean price is going up. If your asset is going down, 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 yeah, then you try to find the previous impulse point, and it's going to be somewhere above.
Okay.
Mm-hmm.
Question. I make my lines using the trend before the significant drop. So, and my exponential starts from the last impulse just from significant drop, and after that it starts to rise, and now it's sometimes higher than my line of resistance. So it can be like this.
Mm-hmm. So it cannot be then. You should widen your corridor of volatility then, if it happens this way, right? You will have to do this. Also, dear students, also please, one more bit of your attention. You've introduced these changes to your graph. In order to save them, in order to save these changes, please go here and save chart layout. And please, as soon as you introduce any changes, make this operation. It is very important, because sometimes this website breaks and you will lose everything you've created, you've drawn. Okay? So you take this thing and save chart layout. Okay? Each time you've introduced some changes to your graph. So by now I've already found line of resistance and line of support. And I can do what? I can make a screenshot of it. Print screen. And insert it here. This is my picture. This is my picture, a very beautiful picture. Okay. Figure 1. Figure 1. How do I call it? US soybean long-term view. At this long-term view, when do I buy and when do I sell? This is the question, right? How can we answer this question? When do I buy and when do I sell? When do I buy or sell? I buy as soon as the price hits the line of support. I sell as soon as the price hits the line of resistance. And here comes the rule. We never buy on the highs and we never sell on the lows. It's just a piece of an advice. Yeah, we never buy on the highs and we never sell on the lows. For example, here, this is the high, right? You should not buy here. And this is the low, so you do not sell at this particular point, because the price may go up. That's the longer term view. This is the strategy of what kind of investor is it? What do you think? What kind of investor makes such a strategy? A patient investor. Patient. He has some period of time to think, and they are not concerned about the fluctuations of the markets in the short term.
This is a conservative strategy.
A conservative strategy, right. Conservative strategy. Yeah, we may actually call this strategy a conservative strategy. Yeah. Strategy number 1. Strategy 1. Conservative. Okay. Conservative strategy. What about strategy 2? Impatient strategy. Actually, short-term strategy is also called scalping. Scalping strategy. Scalping. To buy or sell in short term. What is a short term in the financial market? It's the period of 1 or 2 days. It can be even less.
5 minutes, because scalping
Yeah.
is about
Yeah.
really short time.
It's a very, very short period of time.
And
So
the
it's
price of
today.
the asset is very volatile.
Yeah, yeah. So it's today.
Make profit from this changes.
Usually we do that on 5 minutes chart. 5 minute chart. Usually. Unusually. Usually. Usually it's a 5 minute chart. I go on 5 minute chart and see what is happening.
You better to change your asset on the crypto market, because this market is very volatile.
Yeah.
It's
Well,
more common strategy in this market.
But I've chosen that already, and I will have to continue. So otherwise the mechanism will not be understandable. Why I've chosen this one or the other one. Let me stick with that asset. Okay. I would like to choose 3 indicators, and these indicators are going to be MACD and 2 moving averages. Like I said before, I need MACD of 50, and it's going to be red, and I need MAE moving average of 20, and it's going to be blue. Like this. I do not change MACD, it will stay the same. Please do not forget about saving chart layout. I construct moving average 20, blue line, moving average 50, red line, what do I construct? I construct these things. Moving average 20 and 50, and also MACD. Rules. Blue line goes above red one, buy. Red line goes below, no, red line goes above blue one, sell. But it is not all actually what I got to tell you at this particular point. It will not be true if I do not include something else for the analysis. I need a test of the price in order to understand when I should really enter the market to buy or sell. And actually I got to add one more rule. Look for a crossing of blue and red lines. Look for a crossing of blue and red lines, especially when they go as far from each other as possible, because it shows more volatility, and volatility is the blood of the market. It makes you profit. No volatility, do not enter the market. No buy and no sell, that is. No buy, no sell. No volatility, do not enter the market. No buy, no sell. So visually, it's like this. You see, here at this point, the red and blue lines are too close to each other. That means very low volatility. You're not going to make much profit out of this. But here, for instance, yeah, it is wider, and it means more volatility. So it's better sell here than sell here at this particular point. Or this one, yeah, it also crosses here, but it is in a flat sort of dynamics. What kind of profit can you make when it's flat? You can do anything. Okay, what's going next? For the full picture to enter the market, for the full picture to enter the market, I need to see a test. I need to see a test. What is a test? Description of a test. There are three descriptions of a test. 3. 1. The price touches the blue line and bounces up to the price goes in between the red and blue lines Yeah, that's the description of a test when you buy. When you buy. The price goes in between the red and blue lines and goes up. Goes up. Above the blue line again. And 3, the price breaks the red line below but not more than the size of a full-bodied red candle, and then goes up again. So let's see this test, because it's a very, very vague description, I believe. You got to see this for yourself. Please be very careful here. So, like here, the blue line, yeah, we see this crossing. You see this crossing, right? They cross at this particular point. Cross. The price touches the blue line, goes in between, and goes up again. It's two descriptions, right? Two descriptions. What about the third description? The price goes touches the blue one, goes in between, goes up again, goes in between, breaks the red line, but not more than one full red-bodied candle. Yeah, full-bodied red candle. If it were a lower, for example, like this, here, if it goes like here, it's already a broken strategy. You do not enter the market. If it goes below more than one full-bodied candle, like here, for example, yeah, you've got more full-bodied red candles that go down and down and down. So it's not a strategy for you to choose. It's not a strategy to buy. Let's see what happens in terms of a test when the red line is above the blue one. Actually, you may write the point to enter the market at this point. The point you enter the market by is the first full bodied green candle. This is very, very important. You start buying, you open your position at the first full-bodied candle. Description of a test when you sell. The price touches the red line and bounces down. Not bounces, but goes down. Goes down. The price goes in between the red and blue lines and goes down. Below the blue line. The price breaks the blue line below, but not more than the size of a full-bodied green candle, and then goes down again. So this is a description of a test when you sell. What is the point for you to enter the market? The point you enter the market when you sell the first full-bodied red candle below the blue line. So let's try to find these moments. very, very bad movements. I don't like them. For example, I like this one. This is the crossing. This is the crossing. Cross. The red line goes above the blue one. That means I consider opportunities to sell. Okay? Then comes the test. The price touches the blue line, goes in between, goes up, but not more than the full-bodied green candle, then goes down again, and I start selling at the first full-bodied red candle below the blue line. That means I sell at this first full-bodied red candle below blue line. First full-bodied, not bodies, bodied red candle below blue line. When do I exit the market? I exit the market when they start to converge. I use MACD. I'm trying to find two hills here. Convergence. Convergence. So at this price, there are more people willing to sell than at this particular price because the market activity is lower. Right? So these trend lines converge, and at this particular point I should exit the market. It's 1426. Exit. Exit the market, and the time is November 10th, 11:15. No, this is not Moscow time. Moscow time, UTC +3. That means November the 10th, 1915. This is my exit. So I entered the market where? Here. November 10th, 12 in the afternoon, at the price of 1452, and close my position. Save chat layout. And close my position. At 1920, at the price of 1426. How much money do I make? How much money do I make? Actually, lots of money. I make $25. Everything depends on how many lots you buy, right, or sell. If you sell 10 lots of soybeans, it would make you over 2,000, I believe. So we make a screenshot, right? We make a screenshot of it, print screen, and we enter this when we sell, the description for selling. Figure 2, scalping, strategy to sell. So your home task is going to be, right? Yeah, find a strategy to buy using this description and calculate. Please make calculations. How much money? Please make calculations. How much money you make? Yeah.
For some students, the course is not available.
Yeah. Just you send them to my email in PDF format. Okay. You convert Microsoft Word in PDF and send them to me. When you do the home task. After you've done the home task, yeah? Not now, not now. Not now. You will do this at home, yeah? Material on course?
It's not available even open.
Yeah. On my YouTube channel. Yeah. This is me and my channel. So, using economic calendar for trading, I explain how you use economic calendar, how you trade on events. Well, about Stalin, you do not listen about Stalin. You may actually if you want, but this is not obligatory. Videos. Technical analysis in financial markets. Technical analysis in financial markets. Making investments during Corona. Housing prices bubble and crypto boom. Implications of issuing cryptocurrencies. Well, actually, you may watch anything you like, which is closer to you. Understand? And also, I may send you a presentation. A presentation as well.